G'day and welcome to this week's video. My name's Robert Gowdy, and what I was keen to chat about today was dividends and dividend yield. And the reason why I brought this up is a few weeks ago I went to Peter Thornhill, went full day investment seminar, which was as always fantastic. Peter has really worked out what's important when it comes to investing, and the way that he conveys the message around dividend yields as a abstract calculation based on the past, and comparing that to actually dividends, the physical investments. So the way that he conveys it, and this is from the book, that yield and income are two very different things. One is a dollar value that you can spend and enjoy, and the other is an abstract number or ratio and based on something that's happened in the past. So, and just to explain how the dividend yield is calculated, really you take into account last year's dividend, divide that by today's share price, which varies of course throughout the year, times by 100, and that'll give you the dividend yield. What I've said to clients, because I often get a lot of retired men, not the ladies, are thinking I've got to get high dividends, and my answer to that is often, not often but all the time, is that look, you don't need high dividend yield, you just need great businesses. And so I've often taken away the discussion away from I must get high dividend yields to you just must have good businesses that are growing their dividends. So what I'll do now is I'll just switch to the screen and give you a bit of a look at some really good examples. Now the examples that I've got for you is comparing Microsoft, looking at their dividend yield, and then looking at Telstra's dividend yield as well. So let's kick off with Microsoft, and you can see here this goes back to the end of 2013, where they had a very healthy dividend yield of 3.2%. And you can see here, just on face value, you see this graph that the dividend yield has been grinding down to it's around 0.8. So not a very healthy dividend, I suppose, dividend yield. So it doesn't tell you too much. If you go and have a look at Telstra, it's a very volatile dividend yield. You can see that 10 years ago, similar time frame, 5.6%. This is fully franked. So a lot of people made a lot of decisions around buying banks, or particularly Telstra. Telstra was always the darling of the dividend yields. Peaked out at nearly just over 8.6% to still what is now a very healthy 4.2%. But what does this tell you about the business? What does it tell you about the actual, the dividends, the income itself? Well, it doesn't tell you anything. So if we now we'll take away the dividend yield, let's put in the actual amount. So is this a graph that you like? And this is what I show clients in the interview room, that back in 2014 in February, that you're getting 35 cents per share. And then what we're getting now is that we're getting 17 cents per share. So the actual dollar value has gone backwards in terms of what you're physically being paid. And if we go and have a look at our friend Microsoft, and we get rid of all the noise there, you can see that over the last 10 years, the dividends that have actually been paid back in 2014-13 was $1.12 US cents, has gone up to $2.72. Now, I've always said that the valuations of any asset should be driven by the profitability. So clearly we've got dividends increasing over time. I dare say for Microsoft to do this, their profitability has had to go up over time. So if we look at the share price of Microsoft back in November 2013, looking at similar dates to what we're looking at here, Microsoft was about $37.50 per share. 10 well, not quite 10 years later, but August, so today, they're trading at nearly $30 per share. Telstra, by example, going back to November 2013, was $5.15 per share. 10 years later, it's around $4. So you can clearly see that dividend yield doesn't tell us a thing. You can have a great yield and the dividends actually go down and the share price goes down, but you can still have a great yield. And that's what Peter Thornhill's been so good in conveying, that story about what's important. And dividend yield is not important. It's a blunt axe. It's looking backwards. I would love to see growing dividends, and because that's what we get to spend. It's what we get to have fun with and enjoy our lives, our retirement with. I will go into further details and perhaps talk about payout ratios and look at these same businesses again as two examples of how to. Obviously different sectors, different industries, and very different businesses. But we'll have a look at payout ratios next. But thank you for listening. Please subscribe if you haven't done so already. It would be great if you could. That helps us build our base of education, and that's what we're doing all this for. Thank you for listening. We'll see you soon. Bye.